Good morning. This is where I give you a simple analysis on the stock market before the trading day. So let's get started with oil. If you remember yesterday, here's what I said about oil. I said to be careful. Listen, what can we expect of oil? Well, XLE is the symbol, XLE. I also like to trade XOP, but XLE is the symbol. So again, you got to be careful. You should be selling into these oils, and you need to be careful because it could just do the opposite. If all of a sudden they talk about peace and the war stops, oil can tank. Exactly what happened yesterday afternoon. They started talking about peace, the war stopped, and the oil tanked. That's why I've been telling my members, continue to sell into this profit and put in your stops. So let's take a look at what happened here. So XLE is energy. And you can see how energy just pulled back yesterday. But you got to be careful because of a one-day pullback, because the momentum, you can see right here, your momentum is still going up. Be very, very careful. Now, SHW, which was a short, that turned around, went the opposite way. But again, you got to be careful because the momentum is still down on the short position. So be very, very careful. So let's take a look at what's going on with the spiders. The spiders continue to try to struggle to get above that February 19th high, but what's going to help the spiders get above that high, okay, is going to be the banks. The banks have been outperforming, been doing beautiful. Take a look at XLF, that's the ETF, above both moving averages. And you can see on my Pro 2 here, you can see money has been coming right into this, okay, right into it, all right? And you can see on this chart right here, your red and white candlesticks above the moving average, but this gives me great confidence when I see it turn to green, and so that's doing well. My Goldman Sachs is doing very, very well. We're up about 20% in Goldman Sachs. We're up in Citigroup about 20%. And again, you can see we got great support. We're above the moving averages. It's pushing the S&P up. And my Pro 2 is telling me plenty of money is still coming in. I'd be very careful with your tech stocks, okay? Some are doing well, some aren't doing well. My Micron technology is doing very nicely. Again, you can see on your chart over here, it's above support. And my Pro 2 is indicating that a lot of money's been coming into that stock as well, MU. And MU, we're up about 32%. I have two good stocks, GEV, and that stock's up about 32%. Same thing, very powerful stocks, beautiful momentum, great volume, and they're mostly, look here, they're above those support lines. That's important. And keep watching that volume. So both GEV, VST, they're both AI stocks, and they're doing very, very well. We're up over 32%. Now, some of the tech stocks, okay, like Amazon and Google, see, they're not as strong as the banks. So right now, I like the banks. I think the banks will push this market up and out. Now, the one problem in the whole market is the small mid-cap stocks, IWM. They're nowhere as strong as the spiders. They're nowhere as strong as the bank stocks or tech stocks. IWM is your small mid-cap stocks. And they're underneath the moving average, and they tried several times to break out and has failed. If they break out, then that's a better chance we break out through that February 19th high with the assistance of bank stocks. But if IWM doesn't, and also another problem are the bonds. You gotta look at your bond market every day because the bond market's been going down. Yields been going down. What does that mean? Your return on your bonds have been going down. What's bad about that? Well, it can take down the stock market because if we get an inversion between the 2-year Treasury and the 10-year Treasury, where all of a sudden you can make more money on the 2-year than the 10-year, that's negative. That could take the whole stock market down. Now, don't get confused. These aren't interest rates. This is the return on your bonds. The return on your bonds are negative, and that is worrisome to a lot of traders right now. They're very worried about the bond market crashing. And then finally, my gold stocks are doing well. GLD, that's my ETF that follows the gold pricing, and my miners, GDX, you can see they've been going sideways, stalling a bit, but I still think that with that bond market giving me a signal that could be a problem, that's why gold is hanging in here and could go higher. Now, Again, for more information, okay, just simply comment the word stock below, and I'll work with you for free for 10 days. So again, until tomorrow, okay, see you on the chart.